Alright folks, so today we are going to talk about one of the most misunderstood filing status, which is called married filing separately, or MFS. So most couple, to be honest, file jointly, and as I mentioned multiple times, this is in most scenario, is the most beneficial way of filing. But filing separately sometimes makes a lot of sense. Let me break it down for you. So first, if you have to choose married but filing separately, you have to know what's the benefits of filing jointly, because you don't want to miss the benefit. Okay, so as I said, for most of the scenarios, married couple filing jointly is the most beneficial because they can access to a lot of tax credits. So, for example, if you got like a child tax credits, got like a dependent care credit, even got adoption credits, or income tax credits. You got tons of credits that you can use, and of course a lot of tax-free exclusions. So, for example, like U.S. Bond interest, Social Security benefits, and all that. And of course, you like credit for disabled or elderly status, deduction some like education benefits, student loan interest, and all that. So basically, a lot of benefits, a lot of credits, a lot of deductions. So and you can raise the threshold a little bit higher. Okay, so so as I said, most of the time it's beneficial. Just it kind of like a no-brainer situation. If you got like no complications involved, you should filing jointly. But there is a catch. The biggest risk of filing jointly is that the IRS treat the both of spouse as like one entity. So basically, both spouse share the responsibility of the total tax liabilities. So, for example, one partner's tax can affect another spouse. So you don't want that. If you don't want that, you need to reconsider this scenario. Okay, and so you can choose the married filing separately. And I also mentioned some of the the distrust scenario. Okay, so for example, you don't want to get involved with your spouse's liabilities. Okay, or you don't trust this spouse can file a responsible enough to file that accurately. You don't want to get involved into that, right? You can do this married filing separately, which means that you're only responsible for your way of the story. And except for this trust issue, if you don't trust your spouse to do the filing jointly, there are some of the specialized cases. So, for example, if there are significant itemized deduction, okay, so for example, medical bills, something like that, of a certain spouse, of one of the spouse, that can lower, if you file separately, it can significantly reduce the tax, okay? But if you file it jointly, it becomes harder to reach that overall goal. Okay, so we will talk about that in detail. I'll just give you some of the number, so it's easy to make sense of things. But just remember, so for example, you've got a significant itemized deduction from one spouse, right? That's if you file jointly, that lower the overall tax exposures. If you've got one person, that will greatly reduce the tax. But if you go combine it jointly, that may be harder to reach that goal of reducing the threshold. And sometimes, if they are filing in the same bracket, so if both partners make the same money, right? Not exactly the same, but approximately the same money. So approximately the same bucket. So if you find jointly by combining all this income, because you find jointly that's combined income, maybe you would just push the overall to a higher bracket. Okay, that's that's make more sense to reduce the tax because you want to file separately, as if it's never married, right? Not 100% exactly as if it's never married, but file separately do make sense because it's sort of a lower the bracket because it's not like a joint income, right? So keep each of the person, each spouse in like relatively lower income, lower bracket, but not always the case. You have to analyze a specific scenario in specific number.